Assalamualaikum and hi. My name is Siti Shakira binti Abdul Halim. My matrix number is 10D8020F2002. Hi, I will talk about Dutch Lady Company's background and I will start with the company core business. Dutch Lady Milk Industry Berhad or Dutch Lady Malaysia is a manufacturer of dairy products in Malaysia which was established in 1963. Dutch Lady was the first milk company in Malaysia listed on Bursa Malaysia, the local stock exchange in 1988. Dutch Lady is a subsidiary of Friesland Campina, which was formed in December 2008, a Dutch multinational corporation and one of the largest companies in the world. Permodalan Nasional Berhad is the second largest shareholder in the company. The company's factory is in Petaling Jaya and it employs around 600 Malaysians. Dutch Lady Malaysia manufactures and sells variety of dairy products and fruit juice for the home and export market. The export markets are infant formula, powder milk, UHT milk, culture milk, growing up milk, pasteurized milk, yogurt and fruit juice drinks. The company's dairy products have a strong consumer following and are represented by strong brands like Dutch Lady, Friso, Frisolex, Completa, Omela and Joy. The products range consists of consumer milk, milk in powder and concentrate form, dairy drinks, yogurts, dessert, cream, coffee creamers, cheese, butter and baby and infant food. Moreover, Dutch Lady supports local industry by adopting a larger amount of local ingredients in its products. Dutch Lady Malaysia is also the largest purchasers of local fresh milk from the Veterinary Service Department. This is done through the company's dairy development program, advanced in collaboration with the DVS with the assistance of the Netherlands Embassy. I will talk about the company's mission and vision. In line with Dutch Lady Milk Industry Berhad, the mission of helping Malaysians move forward in life with trusted dairy nutrition. The vision for the Dutch Lady Industry Berhad is to further strengthen our position as the leading dairy company driving growth. Okay, this is the organization chart for the Dutch Ladies companies.
Madam, my name is DPA30063 and my matric number is 10D8020F2041. Today I would like to present about the calculation of ratio at 31st December 2020. Suppose we calculate the liquidity ratio. There are two ratios, that is quick ratio and then current ratio. Current ratio formula is current asset divided by current liability, so we get 0.89 times. And then quick ratio formula is current asset minus with inventory and then divide by current liability, so we get 0.42 times. Calculate the efficiently ratio. There are 6 types of ratio, that is inventory turnover ratio and then inventory turnover ratio in days, account receivable turnovers in days, and total asset turnover, and lastly is fixed asset turnover. Firstly, we calculate the inventory turnover ratio. The formula is cost of goods sold divided by inventory, so we get 4.92 times. And then inventory turnover ratio in days, 365 days divided with inventory turnover ratio, so we get 74 days. And then the third one is account receivable turnover. Account receivable turnover's formula is credit sales divided with account receivable. Account receivable turnovers in days, formula is 365 divided with receivable turnover. And then total asset turnover formula is sales divided with total asset, so we get 2.21 times. And lastly is fixed asset. Fixed asset turnover, the formula is sales divided with net fixed asset, so we get 5.23 times. Now we calculate the profitability ratio. There are 5 types of ratio, that is gross profit margin, operating profit margin, net profit margin, return on asset, and then lastly return on equity. Gross profit margin formula is gross profit divided with sales and then times with 100%, so we get 32.44%. And then operating profit margin. Operating profit margin formula is operating profit or EBIT divided with sales and then times with 100%. And then net profit margin. Net profit margin formula is net profit divided with sales and then times with 100%, so we get 6.67%. Return on asset. Return on asset formula is net profit divided with total asset and then times with 100%. So we get 14.71%. And lastly is return on equity. Return on equity formula is net profit divided with equity owners and then times with 100%. So we get 44.04%. Now I'm talking about the fourth calculation, that is financial leverage, or we can say capital structure ratio. There are two types of ratio, that is debt ratio and then time interest earned ratio. Debt ratio formula is total liability divided with total asset and then times with 100%. So we get 66.61%. And then time interest earned ratio formula is EBIT divided with interest. So we get 147.41 times. The last calculation is market value ratio. There are three types of calculation, that is earning per share, price earning ratio and then market value ratio. Earning per share formula is net profit or earning available for common stockholders divided with number of shares of common stock outstanding times with 100 cent. And then price earning ratio formula is market price per share divided with earning per share. And then the last one is market value ratio. The formula is market price per share of common stock and then divide with book value per share of common stock. In this company, the market price is 33 ringgit 52 cent. That's all from me. Thank you, madam.
Good morning, madam. My name is Novish Dr. Kalanthima. My matching number is 10DAT20F2027. Today I want to present for calculation ratio 2021. We use 5 types of ratio. First is liquidity ratio. Under liquidity ratio, we calculate current ratio. The formula is current asset divided by current liability. We get 1.58 times. The second is we calculate quick ratio. The formula is current asset minus inventory divided by current liability. We get 1.05 times. Second ratio is efficiency ratio. Under that, we calculate inventory turnover. The formula is cost of goods sold divided by inventory. We get 4.56 times. Then we calculate average age of inventory. The formula 365 divided by inventory turnover. We get 80 days. Account receivable turnover. The formula credit sale divided by account receivable. We get 16.71 times. Then days sales in receivable. The formula 365 divided by receivable turnover. We get 22 days. Total asset turnover formula sales divided by total asset. We get 1.62 times. Fixed asset turnover formula sales divided by net fixed asset. We get 5.17 times. The third ratio is profitability ratio. Under that, we calculate profit margin. The formula is gross profit divided by sales times with 100%. We get 35.26%. Then operating profit margin, operating profit or EBT divided by sales times with 100%. We get 25.39%. Net profit margin, net profit divided by sales times with 100%, we get 21.87%. Return on asset, net profit divided by asset times with 100%, 35.37%. Return on equity, net profit divided by equity owners times with 100%, we get 64.82%. The fifth ratio is market value ratio. Learning per share, the formula is net profit or learning variable for common stock shareholder divided by number of shares of common stock outstanding times with 100 cent. We get 387.15 cent. Price learning, the formula is market price per share divided by learning per share. And we get is RM8 ringgit 65 cent. Market book ratio, market price per share of common stock divided by book value per share of common stock. Before we calculate that, we need to calculate book value per share of a common stock. The formula is common stock equity divided by number of shares of common stock outstanding. We get 5.98. After that, we calculate the market book ratio. We get 5.61. That's all.
Hi, my name is Ignas Paul, son of Simon Paul, and my metric number is 10DAT242. So I'll continue with the question which asks to compare both ratio for both here and then comment on each ratio. So the first one will be current ratio. For that, 2021 current ratio is higher, so it indicates a greater degree of liquidity. Next one is quick ratio. For that, 2021 has a higher quick ratio, so it indicates that the company has enough quick assets or liquid assets to cover its short-term debt immediately. Next is inventory turnover ratio. For that, 2020 value is higher, therefore it indicates that inventory can be sold and replaced frequently. Next is average age of inventory. For that, 2020 has lower days of inventory compared to 2021, therefore lower days are better for the company. Next is account receivable turnover. 2021 has a high value, so it indicates that accounts can be converted into cash more frequently. Next is account receivable turnover days. For that, 2021 has lower days of account receivable compared to 2021, therefore lower days are better for the company. Next is total asset turnover. 2021 has higher value, therefore the higher a company's total asset turnover, the more efficient its asset has been used. Next is fixed asset turnover. For that, 2021 has a high value, therefore the higher a company's fixed asset turnover, the more efficient its fixed asset has been used. Next is gross profit margin. So 2021 has a better gross profit margin because it's higher. Next is operating profit margin. For that, this represents the pure profits earned on each sale in RM. Therefore, the 2021 operating profit margin is preferred because it's higher. Next is net profit margin. So 2021 net profit margin is higher, so it indicates a more profitable company that has better control over its costs. Next is return on assets. For that, 2020 is good. 2021 is good because it's higher. And next is return on equity. For that, also 2021 is good because value is higher. And next will be debt ratio. For that, more debt financing results in more financial risk for the company. Therefore, 2021 is preferred because it has lower financial risk. Next is time interest earn ratio. So the higher the ratio value, the better able the company is to fulfill its interest obligations. Therefore, 2021 is preferred because it's higher. Next is earnings per share. For that, the return for each share for the year 2021 is more satisfying. And last but not least is market book ratio. So for that, 2021 is better because it has high growth and profitable return. So overall, for the year 2021 is more satisfied compared to the year 2020. That's all from our group. Thank you.